Okay, Tuesday. Well, up in 6 a.m. All right. Running through the charts this morning, I'm basically seeing a lot of patterns of basically it's inside days or pauses. All right. So today may be a little more difficult for traders. Kind of like we're looking at the Australian dollar here. One day it goes up, one day it goes down, one day it goes up. Now we're working this way. Remember that markets go sideways about 80% of the time. Okay, so we may have a day like today where everything's kind of a pause. Okay, now as we know, when something goes sideways for a while, trend develops. Okay, so for as of right now, I'm actually take a look at something here. Data for today. See if there's anything exciting going on. Optimism was strong for business. Red Book, which are retail sales. JOLTS, which is jobs and wholesale trade. Okay, so nothing really too important there. And then what do we have for Friday? PPI, retail sales. Okay, Thursday. All right, jobless claims. Yeah, typical. Okay, so all right, for right now. Okay. Okay, so for right now, basically what we have going on is the same type of deal where you're getting into sideways patterns here, inside days. So this may be one of those days that folks find it difficult because we don't get trends to break out. We basically get it more sideways. If I break this down to like, say, a 2-hour chart. Okay. You can see that it's poked its head, the Australian dollar poked its head through, and then the mauve line is pivot and we're poking below it. So the Australian dollar might come down and test 73 on the futures here. But like I said, as I'm going through the charts, nothing is really, not too much is clear on here, but we're still going to run through them anyway. Okay, so we're back to the British pound here. So yesterday we set an alarm up in here. We could probably set an alarm about halfway back on this bar. For candlesticks, you usually need at least 2 bars for pattern. Okay. You can see that there's little legs down here underneath. So basically prices being repelled down here. Okay. So you're finding people who are wanting to buy this down here. Okay. So set an alarm above this high for today. And then I guess we'll drop this one down to 2 hours. Okay, lots of little lines down here. So 120.60, if this should break lower, 120.60, and then the pivot is right above the highs here. We have, we'll just call this a hammer for right now. This is intraday bars, 2-hour bars. For some of you, I sent out Great Britain pound, New Zealand dollar yesterday. To some of you that are on my list, I was looking for, it was, what was it, 173.10 I think it was. Okay, and then 174.5 is where we're at approximately. We cleared one pivot, and then here's the next one. One's daily and one's weekly. But on this currency, it was how far it's been. Been trading lower here. Let's see how far back I can go. Okay, this is the Great Britain and New Zealand. Okay, so it's been trending down, I basically said, for a decade. Okay, and on the monthly bar, we're getting, we're getting a collection of bars down here, and this is monthly charts. So you can see how, this was a sharp momentum, and then all of a sudden it stalls. Okay, so I'm looking at this as that it's been trading lower for well over a decade, and now it's pausing. Okay, so this would work out for the British pound side, and then the New Zealand dollar eventually will probably go back down into the 40s from around 70 where it's at today. So if you're in this, okay, what you can do is, put your stop maybe 100 points off of where we're at for right now. Okay. The other thing, and I'll get to it, is that a few of you inquired about natural gas. We did get down to 311 on that, and we bounced this morning. Let's see, I'll get to natural gas in a second here. So I want to check this pattern out again here too. Okay, British pound. All right. Canadian dollar, we saw oil pull back. We saw Canadian dollar actually traded higher yesterday with the dollar coming off, even though oil sold off. So each market is its own, well, if oil goes down, the Canadian dollar comes down. Well, it did today so far, but you can see, you have a move off the bottom. These are daily bars here. Okay, so you get a decent candle here, you get the follow through, cleared halfway of this candle, so you basically have a reversal all the way. Now we're pausing. Okay. Now I'm going to assume that this is now reflecting the pullback in oil on the Canadian dollar. Like I said, we have sideways. So it's going to be, today may be a little more difficult for trading. You don't get the trending moves. Okay, Canadian dollar, here's a happy place, 75.62, and we're kind of walking our way backwards here. Probably the only thing I'm probably going to do today is just watch the short side of the US dollar and Mexican peso. Okay. We'll get to that currency. Here's the euro. Okay. At best here, maybe in inverted head and shoulders working on here. Okay. There's some money that can move into this, but like I said, here we have another sideways pattern and inside day. Okay. So we're getting, in theory, okay, they're making patterns that would be of a continuation pattern higher. Okay, the triangles, maybe a symmetrical triangle. Some might be flagging out, but honestly, on a day like today, you might want to go golfing. Kevin, it's January. I know. I don't golf. Somebody said, "Well, was golf a walk interrupted?" A nice walk, rudely interrupted. Mark Twain or somebody. Okay, Japanese yen. Okay, Japanese yen. I was talking about 113, 110 on the U.S. dollar. Yen, it's come back today. Okay. It's come back today. It is trading a little below pivot right now. There's a little long leg here. We're back to a sideways pattern here. So we may be on a hold pattern here for a day because you already have 1, 2, 3 days here on a possible pause. If it cracks below, set a couple alarms here. That'll work. Okay, and then down here. That'll work. Okay. All right. So basically, what I'm looking for is that we correct a little bit deeper of this entire move here. The flip side is if it breaks out on this way, 117. Watch out for days where they just prices poke their head through and then come back. If it's not clear cut to me, I just stand aside. Basically, what I'll be doing is going over earnings for next week's earnings. We had a couple that did move. What was it? AYI moved, and Global Payments GPN I was looking for a swipe of the stops over 80 on that one. And then I noticed that DDD moved higher for those that are in that one, and SSYS. Okay, Japanese, Mexican peso. Okay, so here we have the Mexican peso. All right. You can see the money's come out of it. Okay, so basically how I look at it is it's oversold. It's 3 deviations off the norm. Okay, so it's really been beat up. 2-hour chart. Okay, so here it found a support level and we're getting a green bar. Okay, I'm looking for the Mexican peso to go higher. This would be 47, and on for the currency traders. Okay, so we have the whole, where are we at here, daily? Okay, so we have the election spike. Okay, we're getting Trump in here. We get one more move through here, and then we're pausing. Okay, I'm leaning on the short side of this. Okay, all it has to do basically is lose this 21.21. That should be easy to remember, and that should do the trick. I'll set it here for now. What I'm doing is I'm setting an alarm before it hits the pivot area. And this is the second one if I'm away from my desk or what have you. Okay. So the red line is resistance. Okay, so the Mexican peso came up, poked through it, now it's coming back. Okay. That one should do the trick there too. That'll be probably triggered through this review here. I like the short side of this pair, US dollar, Mexican peso. I think a lot of these things are going to unwind, all the oddball ones, but just some movements. I said 107 on the euro kind of thing. Let's go back to that one real quick. 6E. All right, so what did we get up to? 106.50. Okay, so if this does work into be an inverted head and shoulders, we're back to, I was looking at 107, and then where are you up here? 107.75 area. Okay. Right now we don't have any data. What's going on? A lot of this is just gyrating in the marketplace. All of it as we continue to go through the charts. Okay, Mexican peso. All right. Here we go. Up day, down day, up day, down day. It's good if you trade like a stochastics on a 1 hour. Okay. Let's see. Since markets go sideways the majority of the time, if you put on stochastics and say a 1 hour chart, you can play it that way. Let me take a look here. Stochastics. Boy, I tell you. Dun, 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 dun. We'll do fast. See how that looks. Okay. Come on, you. Oh, you little bugger. Well, okay. I have fast stochastics on here, but basically this is a 1 hour chart. Up, up, down, up, down, up, down, up, down. And, okay. And we're back to the low end here. Okay. Up, down, up, down, up, down. That's one way that they taught me when I first got into the business. Just put on a 1 hour chart and stochastics, and it's just back and forth, back and forth, back and forth, up, down, up, down, up, down on inside days like today. So eventually when we get through today, we will see some breakouts. So you're going to have to be on top of your game. More than likely the range is narrow, and so you're susceptible to whip sign. But the nice thing about narrowing ranges is that your stops, dual-edged sword, stops are close, then they can be hit, but your risk isn't as great. All right, Swiss francs. Okay, anything on the Swiss franc on the upper end, you want to short it. Okay, it made one charge out. It came back more than halfway. Gave it another shot, came back. So as you can see, this would drive you crazy, right? Sideways, sideways, sideways. At best, this is probably similar to um, uh, the euro with possibly an inverted head and shoulders on here. Brent crude. Okay. I laid out yesterday about the bear flag. Okay, so we have, I'm clouding, this is a reversal, 3-day bear flag, strong pullback, and here's where we're at. It's, let's see here. I'll say 56 should be resistance on here. If we, you know, if we go little bits all day long in the morning, about 56 would probably be an area that I'd want to short. The thing here is that you're making a series of lower lows. So the only caution is for the bears is that this is some sort of springboard to go higher. But I see that the money's already in this thing. So the money is susceptible to have this thing wash out. So I need an alarm under here to tell me if we break the lows. And what's about, let's take a look this way. That should do the trick up in here. That'll work. Okay. Because you may end up with the same type of pattern here, where you get a couple of days of bear flag again, and then a continuation lower. But like I said, a lot of these things really aren't clean cut today. Kind of like this, you know, this will drive you crazy. You don't know it though, of course, until you're in it. But here, you know, I lean that short side of oil here. Here's the money flow peak prior, rolled over on Brent crude. Money flow, same amount of peak, got higher, and now we're making some pretty red candles here. Okay, decent selling going on. Here's another one for you. So when I wrote that about $38 oil, the first number I saw was 17, and that was R2. Now I know if I tell you I think oil's going to go to 17, it's just not going to fly. Okay, but you would be amazed. All right, even though OPEC says that they're going to do this and that, how about this one? If we do run into a recession, then they really have to cut back on oil, right? Okay, so the deal is people will pump no matter what. If oil comes down, we consume more. There's more tax revenue. But like I said, you know, we're going to need some follow through here on the short side. But the deal is as time goes by, as we head into the recession, you will be amazed. Okay. So I'm not saying oil's headed to 17 because I've stuck my neck out a few times like that. And of course it takes time, you know. Oil from 108 to 36 was all I was doing was repeating where it went at 2009. I said we're going to go and retest, you know, the oil low of 2009, which was 36, and we did. We got to 2026. So 17's not out of, you know, from 26 to 17, percentage-wise, it's huge, but we've seen it in the past. All right, so Brent crude, basically, I'm going to say that there's going to be some sort of flag or some sort of chop or things of that nature. I prefer to play the short side on this one. And then here's cotton or coffee. Excuse me. How about one more time, Kev? Pick another soft, Kev. Cocoa. All right, so here's cocoa. So you can see, I'm going to assume that that this is the money flow is correct. And so money's been piling into this thing on the way down. Okay, so this is susceptible to a washout. All right, so on the cocoa side of things, neither side of it. Okay, I play at the turning points. You know, one of these that I'll stand aside. If I look at it, it's going to look like just a larger sideways pattern here. But with all this money flow, it's susceptible to a rollover. Cotton, crude oil. Okay, crude oil, the same thing. Money flows way up here. Here was the previous one you saw with Brent, that it was higher. So here's more money up here. You get a strong bar. It reversed through here. This was OPEC. Okay, this is the OPEC agreement and some follow through there. All right, you just draw your trend line underneath here. When it cracked it, retest the highs. You know, so now we're going to get some short covering. Where is this at? 52, we'll say 52.80 for resistance. Oops, going the wrong way. We'll do it that way. As a resistance level, and coming back through would be add to your shorts. Okay, so but like I said, some choppiness today. Maybe you know, if this is day 1, day 2, and day 3 of bear flag, what do we have? EIA, and then Thursday, right? And then Friday slice back down again. But for me personally, standing aside, today's homework day, going over the earnings for next week. Cotton, possibly making a flag here, but the money's in here. You know, if you just draw a trend line underneath, the trend is higher. I'll have to look at the commitment of traders report. But for me, it's just kind of stand aside. I mean, you get one of these, and then you get weeks of this. You get one of these, and you get weeks of this. So I just stand aside. Dollar index. Okay, so we saw the money fly into this, and then new high on lower money. So folks were not committing to this. We get a pull back here. We get somewhat of a bear flag, and we're getting an inside day today. Okay, I would like to see the dollar come back down, because that would help unwind. As interest rates go higher, so does the dollar and stocks. There's a strong correlation between the three. So if the dollar comes down, treasury prices should go higher and stocks should come off. But I'm going to treat this as like a flag for right now. Okay, on the dollar. Back towards 100. Okay. And set an alert on the upside just in case we get some follow through. Now remember, we, you know, as we continue to tighten in that, the dollar should get stronger. The target's above to get to 10, about roughly 104. Basically, you're playing it. Things get kind of muddled in here, you know, 105, 106, 107, 108. That's basically how it is off of the low of 74. You know, we're under Clinton, the high was 120. Under Reagan, the high was 164. You know, and under Obama, we're back to 104 from a low of around 74. So we're in deep into previous areas in the past. You know, we're 15 points off of Clinton's high. Okay, and Reagan's high, of course, we were at 20% interest rates. So that's how the dollar was that strong. Stronger dollar, more imports, difficult exports. Usually in the first 2 years of the president, he spends money on domestic issues so he can get reelected. And if the dollar stays strong, we're going to have to consume our commodities domestically, which are basically autos and homes. And that's where we're at, like the home cycle here. We're on the upswing in the home cycle. Okay, so that's dollar index. S&P, okay, so break this down. Okay, so have the move up in the S&P. Okay, trend. This one gobbled up this one. So here's the first caution sign. We have tried to break out. couldn't hold it. I'll treat this as a retest, but here we are. If we're down today, okay, if we start to trade lower, hold on to your shorts and then hold on for 100 points lower on the S&P. Okay, because you basically have a breakout bar. It failed. We get a reversal bar. I'll treat that for the bulls. I'll lean for the bulls here that this is a retest, and here you're at. If the bulls lose it today, then I'm going to assume we're going to run all the way back down to 21. We'll say 2156, 2155 in that area. Like I said before, I don't think this area is going to hold. Okay, but it all, you know, if we're on an inside day, okay, then it gets to be sticky because then you have a breakout that failed. You tried to go lower, and it held. So you end up with the next day having to clear, what is that? It's 2268. You clear that, then you're breaking out to go back up to, we tried 2280 on there. But for right now, basically it's another large sideways pattern. Okay. Price is above pivot on here. We'll say 2260. Okay. It's a pivot and also support level. Here's the resistance. It's at a happy area. Okay. So we're going to need something to get this out of here. The money can come back into it for the bulls. This is on a 2-hour chart. Okay, you can see how the money peaked high here, basically rolled over, money came out, traded higher, money came in, and then they got out of it. So the traders are very touchy on this here. But as we saw with the daily, I think it was the daily, right? There's still more room to run on here. Okay, this is previous peaks of the money flow. This one, the S&P, they're not in it. Okay, so for the bulls, what would happen is, I think if we take out 2280, then the money would come screaming back in here. Okay, but for right now, you basically have yourself kind of, we'll call it an inside day for right now. Things are going to be as they look for right now, kind of in the quiet range. Let's see here. 57, we'll take that one. All right. So that's S&P sideways, just like this. This is what I think we have going on for today. You know, here you have a pattern where you break higher, come down, and then you get the sideways. And this is multiple days. Same type of deal. You break out, kind of failed, comes back. If it loses, you know, 57, what's that, 60? And then down here, 58 loses. If it loses that, I think then we're headed lower. Then we'll get some excitement. Gold, lots of wicks on top here. Okay, so price is being repelled. You know, you have an update, down day, update, and then pause. This may be one where gold goes back 73. It has to hold 73. Take a look at the daily or the 2-hour. 72. Okay, so they've swiped the stops. All right, swipe the stops in 60. Grr. Okay, for the bulls, I'm hoping that we place sideways in here. A test of 70. That's 70. What they do is they come down, basically test, find the stops down here, and then turn it higher. But the money's in here on an intraday basis, so I'm probably going to have to lean that we're gonna poke our nose down into here. Check for stops. All right. Copper came back on the weaker dollar. For me, I'll stand aside. There is room to run on the upside, but this would probably be a logical spot to, this was support before. This is a retest. So copper here would probably be, this would be an area to short it for right now. But this is a pretty healthy move, and the money came out of it. I'd rather short it down here with a loss that way. You know, if I'm going to stand aside, it's just, if you don't have a lot of players, it's easy to move the market. Okay, but this would be a logical area to short. Okay, let's take a look at it intraday. I'm not saying go ahead and go short this thing. What about if we get copper up to here? We'll try it that way. For me, I'm going to stand aside on this copper. Okay. Okay. Heating oil, same type of deal. Still a lot of money in here. That probably needs to come out of it. The reversal bar, 3-day bear flag. Another one, maybe a 3-day bear flag. Heating oil up to 166 and then further lower. Natural gas. Okay, so we had price hit R2. That was the pro-con day. Okay, we needed follow through. The first day it lost half. The second day it basically took out the whole bar, and then we gapped and dropped. Okay, so the money's now come out of this. I was looking for 311, and I think we hit 310 and change. We filled the gap. We came back, and now we're actually at pivot. Okay, so what I'm looking for here, okay, all right, prices are at pivot and things of that nature. Okay, so we're opening up at the pivot net. So what you want to see is how it works on the pullback. What is that? 314. Okay, so my okay. All right. See how, okay, where is this? 336. Okay, but remember those gaps on the way up around 330, 340. That's going to be upside resistance. So this may be one of those where if you do buy natural gas futures, you may want to write the calls against it. We may end up trading sideways on this one here too and stuck in a range. The risk I have is that we go back into the upper 90s here. The money did come out of it. The money is out of it. 330, 380. The next, okay, how about this one? One of you wrote about, or guess a couple of you wrote about UGAS. All right. Yes, 24 and 311 on the 90 gas was there, but my worry is that you buy in here. You want to be the second mouse. So, okay, we'll say that you snagged the low at 24, all right. You have to adjust your portfolio for a test of say 22 or $20. Okay. Basically, we did get the money to come out of this here. Okay, out of natty gas, you can see the high on money flow here, and they came out here. They came out. Here was the full first pullback, and the second time the bodies they came out of it. Okay, so what I'm worried about is that we come down. Yes, we get a bounce. We're basically trading at the highs, but then we come back through. But we have a larger sideways pattern here. So if you do go into, wait for a pullback today. Okay, obviously the falling knife was yesterday, but we're basically at pivot and stuff. Okay, here's a pivot. We're above it for right now, and then this is an R level. These are resistance levels. Okay, maybe how about this one? Maybe if we see some weakness with EIA, then go after it. But typically, it's running out of time because we're coming into February. We're trading after the seasonal, but the deal is I think we're going to be in a larger sideways pattern for right now. So it's one of those that just look at it but don't give up. Because you come off of a 17-year low, you trade higher. This is, if you look at it and just draw a trend line on here, you're still pointing in the upper part. So you kind of have to go with the trend. This is basically about half back. You filled I guess I can do it this way for bulls and bears. For the bulls, it's still drawing your trend line. It's still pointing upward. You filled the gap. the money's come out of it. Basically, for the bears, is that the $4 level was a hell of a repel. Okay, they didn't even bother going into it here. We swiped the other side, and the deal here though is that if it does trigger, okay, if we do trigger on this next swing through, we'll definitely clear 4. Okay, because people have to come back in and chase after it. So like I said, if you want to go in, try and buy in some weakness today or an EIA. But if you buy UGAS, it's going to be like buy 100 at 24, buy 100 at 22, buy 100 at 20, that kind of thing. I'm going to assume that this is going to hold down in this area again. Okay, you can see how the money came out, money came out, money came out. So on some sort of weakness, you're going to have to play it like, you know, today and tomorrow, or what's today, Tuesday? Yeah. But basically this was your, you know, this should be a pause in the morning and then it pulls back. And then you'll know where your stops are at. You get things get a little close. You know, you put your stop in where you should be buying. We've all had that issue. They hit you by a tick turned. You know, it's a logical spot. 309, 322. All right, I'll have to look through UGAS and DS for on the sentiment for right now. But you may end up with that this is a high for today and then chop sideways. But like I said, if you go into this thing, you may have to suffer through $20 UGAS. That's the whole, you know, when you're averaging down, that gets to be kind of deep. You know, it's not that I'm talking you out of the trade. I'm just saying, you know, like, yeah, 311 worked out. But here you are up against, you know, resistance. But for the bulls, that does have the money flow on here. There is UNL and GAZ. So there's GAZ, you know, it's a 50-cent one, whatever. There's that. And then UNL, which is, I think, a 12-month. So take a look at those two. And then BOIL, BOIL. Very good, Kevin. BOIL, good boy. What time is it? Whoops, 37 minutes. I'm over my limit here. All right, natural gas. Buy the dip. Cross your fingers. Okay, NASDAQ. Lots of bodies in NASDAQ, and we're getting a little Harami cross here. So this is going to be a trigger on the short side. 5,000. All right, 5,000 again. And then it would be half back, which would be this bar. So 5,000 to, yeah, that's right, 20s. So 5,000 is your trigger for an alarm. It's a round number too, because it basically, you blast through, yay, you make one bar, and then you have, things are getting kind of quiet up in here for right now. 2 hour. Come on, computer. All right, so here's pivot and pivot again. Okay, so 80, all right. Any weakness, you come back through 5,000, then you want to run it down to 49.80 on your NASDAQ futures on the short side. On the long side, all of these here are your pivots. Or yeah, resistance levels via the pivots. Oh, that's right. I need to change this, don't I? That'd make life a little better. Okay, so you can see you blast through the high. Now you have an indecision so far today. It tested down here, and here's where we're at. What I'm looking for is, you know, where if there's going to be a failure. That's if we come on through here. Watch for selling off the open. Okay, this is a pretty decent move here, and this could possibly end up being a couple of days of a bull flag too. All right, so your triggers be about 5,000, which is a round number, and then if it's going to be a test, you have, what did they say, 48, and then the upper end of this shadow area, which is 70% of trading, is around 49.60. So you're playing NASDAQ futures by 20 points. If it breaks 5,000, Then you go to 49.80 and see how it holds there, then 49.20 on the flip side. Because we have earnings and stuff, remember. Upside on here would be the same thing again. Here's 50, 40, and 50, 70. Okay, if we get a continuation higher on here. And like I said, these are the pivots. What do I have? Weekly pivot points, and then this person's pivots daily. It's just one of each. Whatever. It's all it is just a line to look at the targets. You can see right here. Here's a support level. Price comes down, gets within a tick or so, and then turns up. Okay, so if price today, if the Nasdaq closes below 50.20, then you want to play on the short side of things overnight. But we have earnings in that today, so we shall see. Okay, Nasdaq sugar looks to be flagging out here, but it's usually a 3-day move. We're on day 4, so sugar has to hold 19, we'll say 1968 or so for the bulls here, or this is just going to end up being a larger sideways pattern for sugar. Okay, here's a support level here on sugar. Okay. No more than half back on this pattern. So I'd be down to here. 1950. Bulls are going to have to support 1950. Silver, same thing. Inside day. I think it may be a pause before headed higher. Bonds, same thing. Kind of a symmetrical triangle for right now. Another inside day. Up strong, halfway back. Next one, and then now you're working on an inside day again here in the bonds. See, some of these things you don't want to just touch. VIX futures. I'll have to check on rollover on for 2017. I'll send out a link to candles or to a calendar for from OCC options on VIX futures when they expire, because then you end up with things like this where it opens up here and just comes out of it. But we're back to, we're at under 13. At some point this is going to give in. If you go look at 2014, it did trade lower than down here. But, it's just, like I said, it's just a matter of time before we get another shot at 22 to 24. This one was the ugliest of the bunch yesterday. Same type again here too. We could have a short-term double top on here. The Dow, it's all earnings related. Buy some, DXD or, some puts or whatever, just if this is just turning out to be a double top. Very, very narrow here. The money flow is in it. Okay, so it is susceptible to a pullback on the YM futures. Bonds, same thing here. So you're getting a little pause pattern. That's how I'm going to lean. It's a pause pattern for right now. But today is just one of those days you just kind of want to stand aside. Daily on corn. They're trying to get this thing to break out. The money's in there. They were anticipating that this was the run, and it came back against them. So this corn would be susceptible to a hard sell-off. That's why I mentioned yesterday that producers do some hedging on here, especially if the dollar, holds its ground, then it could take off higher the next day, and then we're back to the commodity. Then we'll have some moves. Copper will come off, we're back to the game of the stronger dollar, weaker commodities. 5, same thing, just kind of a pause here. But you're looking for areas to short on the debt. Bean oil, talked about that yesterday. The money flow wasn't in there. It did poke its little head up above. Then we're getting our little harami cross thing going on here. I'd lean on the short side of things here, but I'd basically just kind of stand aside, until you get something that comes nothing's really definitive. Like the top on oil was kind of, you get the news, blah, 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 and it only takes a couple of days and they take it out of it. Notes, same thing here on notes, sideways pattern, probably poke its head higher to 125 and we'll say 3/4. It will probably, especially if they come back in the earnings, they say the dollar or stuff is soft. Remember these global indexes. Go look at India. Go look at, these indexes aren't. The rest of the world is basically working on a decent sized correction right now. So, and they have to buy our products and their dollar stronger. They're not going to want to, blah, 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 yada, yada, yada. And beans here, money is beginning to come out of it on a daily basis. It was the weekly basis that was pretty scary. A lot of money in there. I'm still leaning for a washout things kind of deal. The happy place is like 392. I got to get this thing on the upline, Kev. Upline, 46 minutes. Wow. Sideways pattern here on twos, but you're looking for places to short. And wheat, we're back to the old 420 area as support. There is room that can run on here, so you'd want to support wheat if it comes back down into the 420 areas. Watch your. I'll do charts on that or set up. I'll do my charts today because things look a little rough. Today's a theta day, basically decay day in your options. So. Everyone have a good day. Sorry, this ran a little bit longer. And there you have it. Bye-bye.